things about trading Forex is that you don't actually know exactly which trade is going to be a crazy winner or just another loss.
What's up, everybody? We are currently live.
Taking away the weekly.
Trace back down to the confidence that price is going to be bullish.
Point sort of chasing the market. I was more than happy to stay flat.
Hello everyone.
What the kangaroo tell?
Always recommend trading on the 5 minute.
Some of these exotic pairs in pretty steady uptrend, making these higher highs and higher.
Mostly trend following the stimulus in a certain way.
Good afternoon, everybody, or good morning, I guess, for those in the States. Good evening, wherever you're coming from. Thanks to A1 Trading for having me back. Appreciate it. Just making sure my pen's working. On today's stream, I'm going to talk a little bit about, firstly, a little bit on the markets, what I'm looking at with the index, the dollar, etc. Some trades that I was in that I can kind of show you quickly. The power of the setup that I use, because I've seen that in the past 2 days, actually scalping the charts, which I kind of don't normally do, but because of the conditions in my personal strategy right now, I haven't got many things on the watch list. So going down to those smaller time frames for me, again, reducing my risk, because scalping for me is psychologically is quite difficult. So I like to do it on reduced risk, but going to the market sometimes I do quite enjoy. But after that, I'll go into how, the process of creating a strategy and how you can kind of go about it, things you might have to think of, things you might not think of, and, going through what I did and kind of how I was taught creating a strategy for yourself that you employ, obviously day in, day out, because, one of the most important things is having a strategy. Hope and prayer is not a trading strategy. You need to have a concrete set of rules that you follow to allow you to, trade the markets effectively and profitably, and take away those, emotions that, play a massive part in your trading. Anyway, talk a little bit about the market. Say hi in the chat if you're here. Tell me how your trading's going. I hope it's going all well. SPX. So the SPX, I actually thought that this would move up on account of Powell's statement about inflation, etc., the rate of growth in the economy. And I did think we would get a push on. Now, we didn't get that. We've kind of got a double top here, if you want to call it that, possibly coming into one of my favorite type of corrective, which is the ABC. Right, we got a decent 4-hour candle here, a 4-hour hammer candle here on volume, which sometimes theoretically you expect. See, that's how you're doing. Thanks for joining. Hope you are well. You expect to possibly move to the upside. Now, we're not really getting that. I've said for a while that I don't like this index. And I still don't like this index, never mind if we do get a decent corrective here or not. I just think from a technical point of view, this needs a proper corrective. We've had a decent movement to the upside. Price action for me isn't nice. What I would like to see is, something like this or something like this as a corrective to this trend to create that kind of fluidity. Because for me in the markets right now, even though we've been pushing on, that's not been reflected in the risk sentiment in the currency pairs, which is strength in those commodity currencies and weakness in the risk off currencies. We've kind of seen, days where it's uncertain and things aren't particularly strong. Maybe they come strong within an hour or two, or, things aren't particularly weak. It's just been very choppy, hard to trade markets, which is why I've only taken one position or two positions, this month in 15 days. But, on the lower time frames here, it kind of looked a little bit like a little correction from this downtrend, potentially continuing to the downside. If we break below this 1 hour 200, possibly you're expecting, continued movement down. The The bias now, or the strength now, is certainly with the sellers. I think, you know, if we do get a break below this wick hammer, then you could possibly see some downward movement in this index. And I actually wouldn't mind that. You know, I don't mind having a decent corrective. That's kind of what I want. Renee, how you doing? Good to see you. Thanks for joining. So that for me is kind of what I want, just to healthen up this market a little bit, because, you know, the difference from here to you know, back here, I'd say, back here and back here, is, you know, I made a decent bit of money on this because it's quite a healthy trend. Whereas, you know, I just want a little bit of correction within this period to help that market. And I think maybe, possibly, we see some downward movement. But again, we're just waiting for confirmation on what the market wants to do. So I will firmly, I'll firmly sit on the fence right now, I think is the best way to say it. And I'll wait for that market to give us the direction. I mean, you could say we're in a potential range here, right? You know, potential rough range here in the SPX, waiting for that direction. African wood trader, hey, how you doing? Hope you're well. Okay, and the dollar is quite similar. So the dollar for me is, I mean, same as the SPX, right? We're ranging. You'd expect, using simple Dow theory, you can say, okay, we've created higher highs here, a good bullish bar here on volume. My bias has remained the same. My bias is we get up to this 93, 94, 93.4, 93.5 area and possibly have a decision to make. You know, we're still in that, what could be a rising wedge into that area. You know, we had a big reaction to there previously. Markets have a memory. People will remember this. And I'll wait to see what the market does at this area, if indeed it gets there. So I am on the lower time frames expecting some dollar strength coming in just because of this. But we really need a breakout of this area or a breakdown of this area to potentially get that direction. So, you know, for me, the SPX is, you know, SPX and the dollar is just in a bit of a precarious position where you need to wait. Sometimes, you know, not taking a position or not sitting on the fence a little bit is probably the best decision you can make. And I think waiting for that real confirmation of moving up or down is the best bet here on the dollar. In saying that, my bias is to the upside. My bias is interim dollar strength until we get to that area. So let's see if I'm actually right or not. And I'll go into this little scalp that I had yesterday because I think it's a good little learning for my particular strategy. So if I come back here, I took this yesterday. So for me, let me just remove this indicator so it's easy to see. Nope, not that one. So I'll move that SAR. So for me, one of the contexts that, you know, I really like is a cup with handle, right? I've said it a few times on the stream, so you might know it right now. And if we look at this resistance area, this is kind of exactly what I want. And I've always said that this area is the most important part of any context you have, head and shoulders, you know, whatever it is. If you're a breakout trader, the context prior to this break within this section, just prior to it breaking, is the most important. And within this, you can see price action here has given us our ABC. So we've got our cup basing pattern here. We've got our A, B, C. Again, digesting this move, putting more pressure onto this area. You can call this a channel. Right, once we've created our C wave, look what we've got on it. If I zoom in, I think this is easier to see. Yeah, there we go. So here we've got an A, B, C. A bullish engulfer here on higher volume at C wave. We pushed on above that 20 period, create a hammer candle, and a good bullish bar here, but not breaking this area. Now, I do like to see that. Right, so this bullish bar not breaking an area is usually a good sign for me, especially if it's coming on higher volume. Now, once we've had that, I wouldn't have minded, right, taking the break here, right? You could, yeah, I mean, I wouldn't be mad at you taking the break there because the setup is certainly valid. I didn't take it because, you know, I just wanted a little bit more. And we kind of got that extra reload here, creating our cut with handle within a cut with handle. Good to see you too, African. Appreciate that. Don, how you doing? Good to see you back. Kind of, again, creating that just more pressure and pressure into that area. And also with this, like if I hadn't told you it was a 5-minute chart, you wouldn't have known, right? So I'm just showing like a great example of the context that I like. Okay, so we've got that cut with handle. We've got our nice ABC corrective. Push on, good bullish bar above that 20 period. That 20 period is close to price action. Another reload, a slight fake here, which is fine. But again, not breach these lows. So simple Dow theory, we're moving in an uptrend and just creating that more pressure. So I took the breakout here, stops roughly underneath here, and this is what happened. So, you know, we got the breakout, came back for the retest, showed bullish pressure on the retest, mullied around a little bit, and then boom, off it went. So I took profits roughly somewhere around here using the SAR. So, you know, that for trade for me was, I think was about a 3R for a scalp. And my scalping, I use the SAR, the parabolic SAR for my exits. Again, making that mechanical. So, you know, I took whenever I have a nice trade like this, I take a screenshot of it, put it in my playbook. So the playbook is, you know, those screenshots of trades that really work out well. The reason why I like doing that is when you're in a little bit of a tough period thinking, you know, possibly going into the cycle of doom where, oh, does my strategy actually work? You know, taking a little screenshot of these things saying, oh, do you know what? It definitely does work. And obviously you've done your back testing as well, but that for me was a really nice trade. I also did have I had a nice little scalp in AJ today as well. I think scalping wise, I've been doing quite well recently. So AJ here, this was not the same context, but again, the power of, I think Todd, I believe, uses kangaroo tails. I call them hammers. I took this hammer on AJ. I just had a feeling that because those stocks were moving down, we'd get some pressure into this AJ to the downside. Took that to the downside, stop under there, and got out roughly about this area. So I've had 2 good scalps the last 2 days, but we'll be waiting long enough for them. So yeah, that was me. Let me know if you guys are winning or not winning, or keeping your risk management fine. If you're up or down, let me know. Okay, let's get into the presentation, will we? Just give me a second. Strategy. So, as I said at the beginning, the most important part of trading is having a strategy. I find that the way, sorry, I'll just go into this. I find that the way the market moves at the moment, it's best to take about 4 to 50 pips and call it a day. Well, yeah, 40 to 50, that's quite a lot, Don, unless you've got a big stop loss. That's, Don, that is so key. Follow through. That word follow through is so key right now. You know, for example, let's look at, okay, I'm going from touch, but let's look at Euro Pound here, right? And I define these markets by the lack of follow through, right? So we've had, you know, for example, here, you know, breaking through the area, and, you know, sometimes on decent context, this goes, right? We've come back, broken through these areas. You've probably got stops taken out, and we're coming back down. You know, that's indicative of this market. And that is the key word, Don, is follow through. So it's a good, well said. That is so true. And once you kind of realize that, they can help you, you know, because there is a legitimate strategy of saying, do you know what? Usually in these periods, I don't make a lot of money, or potentially you lose money during these kind of periods of when the SPX isn't moving and SPX isn't moving fluidly, to take a couple of days off, you know, take a week off. And I know that's difficult, you know, it'll be difficult for me as well. But there is an argument to say, you know, as soon as you find that you're not really connecting with the market, there's that lack of follow through, there's no real momentum there in either direction, take a couple of days off. But again, that's certainly easier said than done. Okay, strategy. So what is a strategy? It's a sequence of rules that allow a trader to enter or exit a position. And why do we need one? Because it makes trading robotic. So we want to take away those emotions, because that is the biggest part of trading, is that emotional aspect. So having, the ironic thing of trading is you can sit here I can sit here on my computer and press any buttons I want, right? I've not got a boss breathing down my shoulder. I've not got anyone telling me you need to do this or you need to do that. I'm not going to get fired, right? But you need to have rules in place to make sure you're doing the right things. And another thing to add to that is this concept of accountability. So this is kind of a little bit of tangent on the strategy, but because everybody thinks that, okay, I'm sitting here, I can do whatever I want. You can press buy 20 lots of pound New Zealand, and nobody's going to tell you off for it. But you have to be accountable to somebody. So for me, when I did my trading business plan, I'm accountable to the fact that I've got to pay my mortgage. I've got accountable to the fact that I need to have some savings there and not blow it all in one day. I'm accountable to my dog because I got to feed my dog. So if I blow all my money, then my dog's gonna starve. If you've got a partner, maybe if you blow your holiday money for that year, you're not going to be able to go on holiday. So that kind of concept of accountability is also quite important in trading. But with going back to the strategy, so there's thousands and thousands and thousands of strategies in the market, right? Thousands. So this is where the cycle of doom comes from, because everybody thinks, oh, this is the best thing. This is the best thing. This is the holy grail now. See on social media a lot, this is the holy grail, 100% success rate. Right? Nothing is ever 100%. But where you get these strategies from is you can either, one, buy off the shelf, so you can actually purchase a strategy. 2, you can modify an existing strategy. Or 3, you can develop your own. Now, for me personally, I think number 2 here is the most prevalent in the market. Getting the basic premise of a strategy, such as a breakout strategy, a breakout retest, a pullback strategy, a scalping strategy, and then kind of develop that into what you personally like. Because everybody's different, right? Everybody trades the market in a different way. Everybody sees the market in a different way. That's why, the market moves, because markets are made up of individuals like you and me. We all see things a different way. I might be buying gold. You might be selling gold. So I think, initially you've got to find something that kind of resonates with you. So for me personally, I always like the breakout retest and the breakout. I always like that concept. So I took that concept and, kind of developed it, using, adding in context before a break. For example, the 3 contexts I like are cut with handle, the V reversal, and the head and shoulders. So adding that in, right? Adding in a 20 period, adding in accumulation phase, adding in volume, all this stuff to a breakout retest that I've added in to kind of make the strategy my own. Now, I'm not saying I'm the only one that uses this strategy. Pretty sure there's lots of traders that do that. But again, just developing things that resonate with you. And there is number 3, develop your own. So you can do that if you find it's probably more prevalent on individual currency pairs. Let's say you like to trade gold or pound yen or euro USD. There might be a certain pattern, if you are a technical trader, that you like to see or you've seen happen a few times, that you think, okay, I'm going to try and use this to profit myself from our trading. So develop your own. But I do think number 2, modify an existing strategy, is the best place to start, certainly for new traders. So where do you start? Number 1 is obviously learning the basics of trading theory, right? Technical and fundamental. You need to have a base knowledge of the financial markets and how to trade before you even think about having a strategy. Okay, you have to know what what the market is before you even start. Number 2, SWOT analysis. If you don't know what SWOT analysis is, that is strength, weakness, opportunities, and threats. So you have to do a SWOT analysis on yourself. What are you good at? Are you good at multi-time frame analysis? Are you a patient person? Do you like having positions on overnight? Do you have a job? Do you pay taxes? What times can you trade? What's your threats? Maybe I don't know, you can only be at your computer for X time of the day. So doing that analysis on yourself will give you that kind of, and writing it down will help you, in determining what type of strategy you will employ. But not only what type of strategy you employ, also things like what time frames, right? Setting up your trading routine, all these little things that will help you, again, make your trading robotic. So if you haven't done a SWOT analysis on yourself, I would recommend it, because you may be trading the 1 minute and 5 minute charts when your personality dictates that you should be trading the 4 hour or daily. So little things like that can help you in trading. So I know from me personally, I'm not a scalper, right? I couldn't handle that psychological aspect of scalping. I couldn't handle losing thousands of dollars in 5 minutes. But I like to, and I also like to take my time. I like to use the 4 hour chart to take my time with positions and properly analyze from each time frames. I don't like, okay, yeah, I do scalp the market sometimes, but that's mainly a bit more for fun. But again, I don't like to make decisions quickly. Again, if you are new, you probably will start on those higher time frames, because you won't have that experience and knowledge of the markets and technical candlesticks theory, candlesticks patterns, to be able to spot them as quickly when you're newer. So SWOT analysis. Again, that kind of goes into number 3, time frames, swing, intraday, scalper, etc. You'll kind of learn that from your SWOT. And once you learn that, you have to write it down and say, okay, so I know that I'm like this. I know that I want to do this. So I feel that I will be best working on this particular time frame. So then define, okay, I'm going to be a swing trader. I'm going to be an intraday trader, or I'm going to be a scalper. Number 4, again, I talked about what strategy resonates with you. So by now you've defined your time frame. Let's say you want to be an intraday trader, trading off possibly the 1 hour chart, 4 hour chart, something like that. This is where you define, okay, what type of strategy do I want? Do you want to do the breakout, counter trend, Fibonacci, breakout retest, etc.? Now, again, you have to figure this out for yourself. What do you like and what resonates with you? Once you've got that strategy, it's not that you go straight into the market, put all your money in and off you go. You have to back test it. You have to figure out what works. So if you've got a basic premise of a strategy, now you might find this on YouTube, or there's lots of free information out there that's good quality information. I mean, Trader Nick has lots of good quality information on his YouTube. But what you have to do is go and back test and find out if it actually works for you. And when you back test, you can then add little things that, again, you like to see. So for me, during my back testing stage, this is where I started noticing that volume has an impact. This is where I started noticing that, using a 20 period moving average rather than a 50 has an impact. This is when I started noticing that I like to see that accumulation phase prior to a break of that level. This is where I noticed that, again, the cup with handle, I like to see that increasing pressure. So ideally, it's a cup with handle within a cup with handle. That's when I learned that I could go on forever. For my V reversals, right, I prefer to see some sort of complex corrective after this V to digest this pattern, right, before I take a potential breakout. Because again, for me, taking breakouts, let's say it's a V reversal, when it's just on this, right, more often than not fails, right? And we want to be, for me as a breakout trader, not part of those failing breakouts. So back test, modify, back test, modify, back test, modify, until you are happy with the results that you get from your back testing. Now, remember, nothing will ever be 100%. So as long as you're profitable, the longer you have the statistics and the data to back up that you are profitable, then that's okay. You can't be back testing everything until you're trying to go for that 100% win rate, etc. You get to somewhere where you're, 40 to 60, depending on your payoff ratio, right? Yeah, as long as you have your edge, then you're fine. So again, you coming down to your SWOT analysis as well. Are you happy winning, let's say out of 10 trades, are you happy winning 4, right? But your payoff ratio is, let's say, 3 to 1. Or do you prefer winning 6 out of 10, but your payoff ratio is maybe 1.5 to 1, right? What can your psychology handle? For me, this is difficult to handle. I like to be here. Even though I don't make as much money per trade, I'm talking on my higher time frame trades, I'm happier most of the time over the course of probably a year, winning more trades than I lose. But because for me, if let's say I lost 3 trades in a row, right? I don't like doing that, right? I don't like being down 3 trades. I know that doesn't sound like a lot, but you know, you get the premise that I mean. So if you don't mind doing that and being, you know, keeping patient, knowing that that one big trade will come and it'll take away all your losses, then that's fine. So finding out what you want to do. And again, it's very important because there's no emotions involved in back testing because it's not real money, that you kind of have to think outside the box and say, okay, this is the results of what I've done. Could I handle this using real money? Okay, and obviously you'll have to, you know, start with a small account and then probably move on up. But again, this is without a doubt for me the most important part of creating a strategy. A lot of new traders, a lot of even a bit experienced traders coming to the market, just, you know, watch a strategy on YouTube and just, you know, put real money on it, and they don't actually know if it works or not. So again, back testing is so important for, you know, not only realizing your strategy is actually profitable, but also for the psychological aspect of it as well, because you know it's profitable. So drawdowns are a little bit easier. Trade management. So you've got your context, you've got your entry checklist. This is what I want to see. I want to see this context. I want to see this period moving averages. I want to see potentially a 50% pullback. I want to see X, Y, Z. Okay, that's all great. But what we need to do now is figure out what our trade management is. So what do we do after we place buy or sell, right? And you can watch a few videos on trade management techniques, but you have to figure out again what you like to do. Do you like to use moving averages? Do you like to use risk rewards? Do you like to use support and resistance? Do you like to use potentially an SAR? You know, what kind of method of trade management do you want to use to take your profits, right? Do you want to place 1 trade? Do you want to place 3 trades? Do you want to place 2 trades per trade, right? So again, this is why back testing is so difficult, takes a long time, because, you know, you're potentially testing all of these to see what works the best. Now, for me, if I was to give you my personal opinion, if you are a new trader and you're looking at trade management technique, I would initially right off the bat say, look at the parabolic SAR. I'm not a massive indicator guy. I mainly trade through price action, but the parabolic SAR is one of these indicators for trade management that I really like, because again, it makes it robotic. But there's an option there where you could say, right, I'll take 50% off at 1-to-1, right? And then the next 50% of my trade, I'll use the SAR. And again, this is a little tip that I would give you, that I personally believe that you should have more than 1 trade per position. So at least 2 trades per position, because again, it allows you to take some profits and also let some run, because not every trade is going to be a big banger and make you thousands and thousands and double your account, etc. They're not really that likely. They're probably few and far between. So taking a bit of money off the table. Excuse me, hope you can't hear that Hoover. So taking a bit of money off the table obviously helps, again, for my personal psychology, and it might help with yours. So trade management. So again, you're writing down what your strategy is, entry criteria. Now you're writing down what you do after that trade management. And number 7, forward test. So that is with real money. Start with a small account, whatever, $100, $500. Start building that emotional side into it, and then progress as you go along. Again, if you are a new trader, remember there are funded programs out there that once you go through all this, right, and you figured out, okay, I'm a profitable trader, you're trading off a small account, okay, you're a profitable trader. Most people won't have the ability to put, let's say, $30,000, $50,000 into a trading account where the returns make a decent bit of money, or enough, to get that reward that you want. So then what I believe is going and get those funded account challenges where you can get funded equity, up to $200,000 to trade off. So that's very important to know. What you're doing and what you're putting the work in here for is, for example, if you can't afford to put all that money into account, is the ability to go from zero to $200,000 in equity and make your whatever return it is, let's say 2 to 5% per month. Obviously, that amount of equity is a lot more exciting than 2 to 5% off $1,000. Right? So I know a lot of traders probably don't know this, but that's certainly where my mind goes is, they're trying to double their $1,000 or $500 account to try and make more money, etc. And that's obviously where accounts are blown, your risk management, etc., which should be in your strategy. But you're not, you don't think about this. You think about this. This is where your mind should go. Mar, yeah, it's not really a 200K account when you're leveraged. It's 100 to 1, Mar. So these funded accounts have a leverage of 100 to 1. It depends on which platform you use, but that's kind of a separate topic. So if you make your 2 to 5%, you make your 2 to 5%. Yeah, I mean that's you can build your own account, Mar. That's absolutely right. Personally, again, this is my opinion. You can have a different opinion. To grow that, okay, let's say you're making passive income, right? And I'm going to say an average trader, a great trader, a good trader will make 2 to 5%. Okay, so 2 to 5% on $1,000. Okay, let's take the 5% view, which is $50. Okay, so now you're up to, let's say you don't take anything out, you're up to $1,050. For me personally, and more, again, this is my personal opinion, you can have a different opinion. That is, for me, looking at the charts every single day, that is not worth it. Right? I have $200,000 in funded equity. Right? And I would make far more money. I make far more money on that funded equity than I would in my own account. Because I can afford to put $200,000 into my own account, right? So I truly believe. And if you want to, start, obviously there's limitations. I'm going off on a tangent here, but I just kind of want to answer your question. There are limitations of it, right? But the positives far outweigh the negatives if you're actually looking to make passive income. So that's my kind of personal opinion. Again, you can have a different one. That's absolutely fine. And number 8, track results. So we obviously, once you can use my FX book, I use trading journal software, but you can use whatever platform you want, just as long as you're tracking your results as you go forward. Because yeah, that's what you have to do. Just keep getting that data, keep getting that stats to be able to continuously improve, or, obviously there's an extent to what you can improve, but always try. Even now, I always try and get better every single month. Because I don't believe in just staying still and not learning anything and saying, right, I've made it. I always think that you should be trying to improve yourself in whatever way every single month. So in summary, again, find out what works best for you. So hopefully that helped. Again, if you like the content and you haven't seen me before, my channels are down here. My Instagram's down there. If you want to give me a follow, that would be great. If you got any comments, let me know. Mar, if you want to message me, I'll happily have a conversation with you about it. But like I said, it's my personal opinion. Everybody has their own. So thanks, everyone. I hope you got some value there, and I'll be back on Monday. I appreciate you joining, and I'll see you next time. Thanks.
Hey guys, thanks for watching today's show. I hope you enjoyed it. And before you go, make sure to check out our guest today and also subscribe to the A1 Trading YouTube channel if you have not already. Risk Calculator is a risk management tool built specifically for MetaTrader 4 and MetaTrader 5 to help you position size properly. Their easy to use software will allow you to enter and exit positions with lot sizes that are calculated for you, suited to your risk management settings that you allow for the tool. This is a big thing because a lot of us struggle with over leveraging or accidentally taking a position size too big, and Risk Calculator is there to help. Like I said, with the click of a few buttons, you're able to set your trade and the lot size will automatically be calculated for you so that it suits your risk management plan. In addition to actually setting your trades with the proper lot size, it also allows you to manage your trades as they're going along. Things like trailing stops, moving stops to break even, or even partial take profits are all tools or features available with the Risk Calculator functions that are available on MetaTrader 4 and MetaTrader 5. If you're interested in checking out Risk Calculator, there's a link down below in the description. And if you use that link, it does help to support what we do here on the channel, which is provide free trading content, again, by the thanks to the help of our sponsors. So thanks so much for watching today. Again, make sure to subscribe to us here on YouTube if you haven't already, and we'll see you back in the next one.